All right, welcome everybody to the Blank Check Group Sunday stock charting session. Today we have a few things on the agenda. The first thing I'm going to be covering is options. So I'm going to go through, just skim over my simplified options course, not the full course, but the slides from the course, just to give us some context to break it down. And then if we have any questions, we can answer them then. After that, Mark will be covering any picks that you all have. So any stock picks or any news based stocks or anything you want us to look at when it comes to stocks, stock news, so on and so forth. We'll take a look at it at that time. And then I'll be covering my picks. After that, Mark will be covering the pattern of the week. And then if anyone's interested in seeing a demo of the Discord, we can do that at that time. I appreciate it, Mark. All righty. So everyone wants to trade options now. Which is not a bad thing. I don't think it's a terribly bad thing. So that's what we're going to be talking about for the first part of today. But first, let me share my screen. 1 second. Which monitor am I on? Here you are. But first, let me share my screen so we can take a look at the news calendar. We also have earnings starting at the tail end of this week. So I think going into this week, we should see low volume. I want to say Columbus Day is tomorrow. The market is still open, but we're going to be seeing low volume at the beginning of the week. I would say maybe all of Monday, part of Tuesday, but then going into the backside of that week where we start earnings, the volume should be back to normal. So it's going to be interesting to see what's going to be happening with these earnings. But I have a few predictions, and I actually based some of my stock picks from this week off of what I think is going to happen for earnings. So let me share my screen. Let's look at this news and then back to options. All right, so this is the economic calendar. This is the correct week. So as you can see, Monday, nothing. Tuesday, nothing. Wednesday, nothing. Thursday, we have retail sales. Friday is building permits preliminary. But the retail sales, again, I don't think that we're going to see anything crazy. I think the numbers should be spot on as forecasted or close. But yeah, I don't think anything major is going to come from the retail sales based on what we saw. Now, when looking at retail sales, a lot of stocks that I talked about in the Discord last week, we could see more upside. So as far as Target, Shopify, and Affirm, it was 3 that I talked about. Those we could see some more upside when it comes to the retail sales month-over-month report on Thursday. So if you're in any of those, keep an eye out. If not, you should be taking a look at those. Again, I think the more that we go into, the deeper we get into the rate cuts, I think that stocks like that, again, Target, Shopify, Affirm, we could see more upside due to the rate cuts that we're going to be getting. So let's see, is there anything else? We have a few Feds speaking on Monday, nothing major. Tuesday, few Feds. I don't see any Jerome Powell, so that's always good. Thursday, we do have jobless claims like every Thursday, but again, can't see anything different here either. Let's see. Yeah, Feds are on Friday, but no Jerome Powell. Okay, cool. So we're in the clear. No Jerome Powell, no FOMC, no craziness. But we do have earnings coming up. You can see. Let me go back up to the top. It's a long list. You can see if you go to the calendar and your trading view, you can look at the earnings. So if you're wondering like what stocks are having earnings, when are they posting, so on and so forth, you can check the list here. Tuesday, we do have United Health, which is always a big earnings for health based stocks. So Cigna, so on and so forth, the stocks that are in that area. Johnson & Johnson, we do have Bank of America. This one is going to be interesting. Warren Buffett has been selling millions of shares of Bank of America, and I want to see if Bank of America tanks, then that means okay, Buffett knew. If it goes up or stays the same, then I'm wondering what was the reasoning behind him divesting all of the money from, or majority of the money from Bank of America. So it's going to be interesting for banks on Tuesday. We do have Walgreens, you see Goldman Sachs, Citigroup. So yeah, Tuesday it looks like a heavy bank day for earnings. And then Wednesday, we have more banks, but then we start to get into um, a little bit of a mix of other stocks. Discover is another one that I've been watching because I remember that they were working to merge with Capital One. I wonder if that's still happening. So that's going to be another one to pay attention to. And let's see what's happening. 17. So yeah, I'm not going to go through all of these, but you see Netflix is on. Netflix is a major one that's going to be on Thursday, but there's a lot of other earnings that's happening again towards the tail end of the week that I think everyone should pay attention to. So nothing major as far as reports, but then we do have large banks with earnings starting Tuesday, Wednesday, and then we have Netflix and then the other tech stocks starting to post earnings towards the end of this week and going into next week. So keep an eye out for that. Any questions? All righty. All right. So let's take a look at options. And again, I'm just going to be skimming through. We don't have enough time to go. It would take the whole 2 hours pretty much to go through everything that are in my slides for my course. But I just wanted to do a quick run through. I may do a run through of my other course as well, my stock basics in 60 minutes. But this time I wanted to focus on options because we're going into earnings. So let me get that pulled up. Which monitor? Monitor 1. That should be it. Okay. You all can see this? Yeah. All right. It's showing on my screen. Cool. All right. So this is the simplified the options course. So again, these are just the slides. This is not the course in its entirety. But this course, I made this course because I was trading options a lot at the time. Still trade options a lot now, but I was trading options like 100% pretty much at that time. Made some great plays, and people just kept coming to me for one-on-ones and wanted me to teach them how to trade options. And I said, okay, I'm tired of doing one-on-ones, but I could do a one-to-many and make this course. So I made this course that will give you that would pretty much simplify options for you if you're a little confused on it. All right. Here we are. All right, this is the course outline. So in the course, I talk about option key. We have option key terms. I do a brief introduction. We have common chart and patterns to pay attention to with options, option strategies, trade mentality, the $20,000 trade, and option resources. So the $20,000 trade is when I turned $600 into 20K. I actually have screenshots and the whole breakdown of what actually happened step by step. Again, in the option course itself, it goes into detail. I show you, screens and charts and all this other great stuff. But again, we don't have time today, but we can look at the screenshots of what I was seeing, and then I can tell you how I was feeling as well. All right, next slide. All right, so what's an option? So here's the technical definition for an option. So I'm not going to go over the technical definition for it. If you want to read that, you can. But an option is basically a contract that gives the investor or trader an opportunity to buy or sell the stock at a agreed upon date or price. So what that means is that the option that you pick is a contract. It's going to have a date and it's going to have a strike price. That strike price is pretty much the price that you're saying. Let's say if you're buying a call option, right? A call option, if I'm jumping ahead, a call option is a option that says that the stock is going to go up. So if you buy a call option for a stock that's $100 and you set the strike for it, the strike price for that stock at 150, you're pretty much saying that this stock is going to go up to 150, and then you pick a date. So once you pick a date, let's say you pick December 31st, basically what you're saying when you're buying that option is, I think that this stock is going to approach or actually hit 150, even though it's at $100 right now by December 31st. You buy that option, and then as it approaches that value, you take profit. Are we all good there? Any questions? Cool. I'll take silence. I'll take silence as a thumbs up. All right. How to buy them. that was pretty simple. I skipped that part. How to buy them, again, you can just buy them through your app. Some apps may need you to qualify for options, like they don't automatically come with options. They need you to put in some information for options. But I use Fidelity and Robinhood for options. But if you have Fidelity or Robinhood, again, they're going to ask you to qualify for options. You just have to answer, I think, like 4 or 5 questions, and then they'll unlock option trading for you. All right, one thing that I like to remember that Warren Buffett said is no matter how great the talent or effort, some things just take time. So this always sticks with me when I look at time decay on options. So anytime you buy an option, since you pick a date, the closer and closer you get to that date, the lower the value is going to go if it's not approaching the correct value. So we'll talk about time decay in a second. We'll talk about how it's quantified and things of that nature. But just remember that anytime when you're looking at options, I know when you buy stocks, there's not a time attached to it. You can buy a stock today and pass it down to your children, and they can pass it down to their children, your grandchildren. But with options, once the date comes up for the expiration, that's it for the option. So you never want to hold the option to expiration unless that's a part of your strategy. And most strategies, when you're trading options, they don't lead to holding a contract through expiration. So remember this. All right, calls. So again, we talked about calls. Calls is pretty much a bet that the stock price will go higher, right? So you have 2 versions of an option contract. Well, you actually have more, but these are the 2 most basic. This is what you're going to run into the most. You have calls. A call is a contract that is bought if you think the stock price will be higher in the future than where it is currently, right? Puts is a contract that is bought if you think the stock price will be lower. So a lot of people do not know that you can make money in the stock market when the market is going down or when the stock is going down. You can make money when the stock is going down by playing puts. You can also hedge against positions that you already hold by playing puts as well. So for instance, if you had 100 shares of the SPY, and for the next month you think that the SPY is going down, you could buy a put option to protect or hedge against your 100 shares of the SPY. And what will happen is that the put increases in value as the stock goes down. The SPY pulls back for a second, you make some money, and then you can turn around and put that money back into the SPY while it's low, pretty much buying the dip. And then when it goes back up, you make additional profit. So puts are a great thing to learn how to play. I remember back in 2022, when the market was going through a bear market, everyone that I knew, for the most part, except Mark, was getting out of the market, just getting out the market because they didn't know how to play puts. I learned how to play puts, and actually it's easier to play puts than it is to play calls, because when a stock pulls back, that pullback can be sharp because everyone is trying to get off the boat at the same time, and no one wants to be the last man on the boat. So I recommend, if you're going to get into options, don't just sit and pay attention to calls. Also learn how to play puts as well. Covered calls and covered puts. I'm not going to go over this one in detail, but covered calls and covered puts, basically you need 100 shares for covered calls to be able to set them up and be the writer of calls. And then for covered puts, you can be assigned shares of an option. I'm sorry, shares of a stock as well. Not going to go into too much detail. Again, if you want to go into more detail, you can either come to our Wednesday intro to option sessions on inside of the Discord, or you can just grab the course. I go over it in detail. Let's keep it moving. All right, time decay. So there's a lot of Greeks. I think that this is the most important. And what is a Greek? A Greek is pretty much a metric that's attached to the option contract. And what I mean by metric is that these different Greeks that are attached to the contract tell you a different aspect of the option contract and how it fluctuates. So this one, theta or theta decay, it tells you how time pretty much eats away at the contract. And let's see, we can briefly go over the definition that I have here. So theta represents the rate of time decay on an option. Specifically, it describes how the value of an option changes each day as expiration nears. Time decay will also be shown as a negative value. You see, is my fire alarm going off? Sounds like my. Can y'all hear my fire alarm going off? Someone give me a thumbs up or a thumbs down.
We can't hear it.
You can't.
I mean, we can hear it a little bit, but it's not noticeable really.
Okay, yeah, I think they're testing something. I'm pretty sure it's not a fire. If it is, no, I'm kidding. I don't think it's a fire. It's a brand new apartment. I think they're testing the fire alarm. All right, let's keep it moving. All right, so again, where are we at? Back to the definition. Yeah, so it describes how much the value of an option changes each day as expiration nears. And time decay will always be shown as a negative value. Time decay is always going to be shown as a negative value because it eats away at the contract. Like time decay can't be positive; it is decay. So every day that passes by, that's another day that you're going to lose money on the option contract. And so, when would you use this? As an example of this, an option with a theta. So if you're looking at the Greek on the option contract and you see negative 0.80, that's pretty much telling you that it's going to decrease by an average of 80 cents per day every day, all else being equal. So what I mean by all else being equal, I mean that if the stock stayed at the same exact price, it would lose 80 cents per day. But of course, the stock is not going to stay at the same price. It's going to go up, down, sideways, you name it. All right. We can skip this one. All right. The benefits. So why trade options at all? One of the benefits of trade options is that they do provide your portfolio additional protection for volatility in a specific stock or index. So again, we talked about hedging. Why trade options? Is it necessary? It's not necessary, but you can make some quick money, right? And you can make it going against, or you can make it going for certain positions or indexes. So I think that's a good point to state. Also, can you make a lot of money from options? Yes, you can. But you can also lose a lot of money too. A lot of people don't look at it like this. People sometimes only look at options in an upward fashion and they don't look at what they have to lose. When you're buying an option, again, since it has an expiration date, if you put $1,000 on an option contract, you can lose the whole entire $1,000 by the end of the expiration date. So just make sure you know exactly what you're doing and you have a loss percentage built, right? So that means if you jump into an option, let's say you go in with $1,000, you should know like, okay, I'm okay with losing 10%, or I'm okay with losing 15, 20, whatever that percent is. Just make sure you lock in at that percent and you actually stick to it. A lot of people trade options and they do not stick to the percentage that they set. They say, hey, I'm fine with losing 15%. Next thing you know, they're losing 60%. And they're like, well, I thought I was going to come back up. No, once it hits your percentage, get out. Or just set a stop loss to pull you out the trade altogether. Also, can you use options to purchase shares? Yes, you can. You can exercise contracts. You'll have an option to exercise the contract once it becomes in the money. In the money is just simply saying that, back to our example, if we have a stock that's at $100, we buy a option contract, we buy a call for it with a $150 strike, and let's say the stock jumps up to $175. You can then exercise the contract and you can get the contract at the quoted price. So the quoted price would be 150, even though the stock is at 175. So when that happens, you just go ahead and exercise the call, but you have to buy 100 shares of the stock. So you have to buy 100 shares of the stock at the price of 150, but you get a $25 discount per share because the stock is actually at 175. Is that clear? Do I have any questions? All righty, let's keep it moving. All right. A few of the common chart patterns that helped me when I first began trading options is the bullish flag, the cup and handle, and the double bottom. The bullish flag is probably the easiest pattern to recognize. It's pretty much a move up, a pullback, and another move up. So it looks literally like an N, just up, down, up. That's all it is. Sometimes you'll see a move up and then you'll see it trade sideways in a horizontal line and then another move up, but it's just up, consolidation, up again. The cup and handle, it looks just like a cup and handle. And I think that Mark should have an example of a bullish flag, a cup and handle, or a double bottom when it comes to the pattern of the week. We've covered these plenty of times, but a cup and handle looks just as it's saying. It looks like a U. You'll see a U shape, and then you'll see a handle pulling down to the downside. Again, if you want to see examples of all of this, I cover all of this in the course itself. But due to the sake of time today, I don't have time to cover all of it and show you all of it. But the next thing is the double bottom. The double bottom is pretty much a W-shaped pattern. You go down into support, you come up in the middle, you go down to support one more time, and then you bounce back out the upside. The best part about a double bottom is that it's easy to figure out where it's going to end because it ends where it started. So that first stretch of the W is going to end right at that same level. So if it starts at $100, it goes down to 80 and goes back up to 90 and goes back down to 80 and goes back up, it's going to end back up at $100. So wherever, remember, the double bottom is going to end where it started. All right. Things to remember about patterns. Patterns do not have to complete themselves. Excuse me. All right. Patterns do not have something to drink. Patterns do not have to complete themselves. So when you're looking at a pattern, I don't care what pattern it is, they all have chances of success, right? So you can look at a pattern and let's say the pattern is making a double bottom and it's forming that W-shaped pattern. It does not have to complete. Patterns have percentage completion percentages, and the two patterns that I would say that are closest to being 100%, there are no 100% patterns, just to be clear, but the closest patterns are going to be an inverted head and shoulders and a head and shoulders pattern. They're some of the biggest patterns and they take the most to form, but they're some of the most accurate. The next thing is that patterns can connect and flow into other patterns. I've played cup and handles into bullish flags, into falling wedges plenty of times. It just comes with studying your patterns and knowing the key points to actually get into the patterns, because sometimes you can get into a pattern too early, the pattern can fail, and then you can lose money. And then all patterns will not be identical, so you will not get in a perfect bullish flag every time. Some are going to be small, some are going to be lopsided, some are going to be large. It just depends. All right, option strategies. Not going to go into these. I'll just name them. So you do have reversals. A reversal, without reading all of this, is pretty much playing stock to the upside when it's been going to the downside for a long time, just to be short. And then insurance is pretty much when, again, you're pretty much hedging against a position that's up. So let's say if you're trading, I don't know, NVIDIA, and NVIDIA has been doing well, you could grab some NVIDIA puts that goes against NVIDIA stock price, to where if NVIDIA does pull back, you actually make money. And then if NVIDIA does not pull back and it continues up, of course, that put option contract is you're gonna lose money on it. But it's just like paying insurance, right? You pay insurance on your car to ensure that if anything happens, the car is going to be taken care of, right? But people are not getting into accidents every single month, but you pay insurance every month. So that's what I mean by insurance. Any questions so far? Cool. Let's keep going. All right. Not gonna go into these option strategies, but leveraging, straddling, and selling weekly covers, I think you should look into those. They're pretty, some of them are a little complex, so we can skip those for now. Trade mentality. All right. Bad habits to avoid when trading options. Once you've hit your percent target, take profit. A greedy trader is also a broke one. If you say that you want 20%, 30%, 40%, whatever it is, once you hit that target, take profit. If you watch your stock hit 30% and you set 30% and then it goes down and now you're negative 7%, now you may be waiting for it to come back up and it may never come back up. And you may just lose on that trade. So again, the biggest thing is once you set that percent target and it hit it, take the money. All right. Next thing is do your research and stop guessing. With options, since you have time decay going against you, you need to be extremely sure that the stock is going to do what you need it to do and when you need it to do it. With stocks, just buying shares, you don't have to be right about when. Like we can say, okay, cool, this stock is going to go up $20 at some point, right? I'll buy the stock right now because I know it'll be higher in the future. With options, it doesn't work that way. You can say, okay, I know the stock will be higher in the future, but again, you have time decay and you have a date for expiration, so you have to be careful. Again, we already covered the third point is to set a percentage target and then exit the trade once you hit your limit. Again, in this example, I set 30% limit for myself, depending on what I'm trading and how I'm trading it. Also, stop chasing the bag. If you're down, get out. Just take it. And if you hit big on one option play, so a lot of people was doing this back when we first started. You would hit big on a play. Let's say you hit for 120% on one trade. You take the money, and then the stock pulls back, and then you think that there's more money to be made. So you put all of the money you just made back in, hoping that it will go up. Do not do that. The only time you do that is if you're 10, 15 trades deep and you hit on every single one of them, then okay, fine. You're just playing with profits at that point. If it doesn't work out, you lost a percentage of profit, but you still have profit. Cool. But most of the time when you hit your target, you did well, you take the money, don't go back into the same stock. Actually, if I hit big like that on one day, I'm done for the day. I hit on 120% on an option, I'm done for the day. I'm done with that stock. I'll wait to reassess, let the trade or the stock do whatever it needs to do for the day, and then I'll hop back in later on during the week. All right, the $20,000 trade. So again, don't have too much time to go through it, but I traded two stocks, Tesla and Ford. This was around January. There was a lot of buzz going around Tesla. Tesla was down pretty much. And I put $611 into a trade. I have the screenshots that's going to show after this, and held it for about 2 weeks, and I made $7,300 from $600. So it's a little bit over $8,000. I want to say I have the screenshot. I can't remember this. This was a second ago, but the next day, I took the money that I had and set up another trade with Ford, and I made $12,000 that next morning. So that put me at about 19. Pretty much right up against 20K. And here are the screenshots. So if we look at this screenshot, you can see that the cost basis total was $611. So I put $611 in. 1 second. Someone's trying to join. Is the alarm still going on? Yep. All right. So this is the trade proof. So this is my Tesla call option. You can see I had a Tesla January 21st, 2022, 1150 call that I was trading. I had one contract. I put in $600, $611, and I held it for about 2 weeks. And you can see the profit that I made was actually, that's a typo. That needs to be 7.7, not 7.3. I'll go change that right after this. But yeah, I made 7,700. That put me a little bit over $8,000. So 8,345 is what I had. And the next day, Ford, they had news that they were doubling the production on the F-150 Lightning. I went against my own rule, and look at the cost basis total. This made me 8,345. I put in 8,342. I put this in, and I went from one contract, and I had 175 contracts. You can see right at this point where I took the screenshot, it was 12:53 when I took the picture. That was, I think, a few hours after I had already taken profit. But yeah, made a little bit over $12,000 at 145%, which is crazy. This percentage here is even crazier to me. That's almost 1,300% that I made in 3 weeks. So just making about 100% a day almost on this contract. and then I just blew it out the water with a day trade for 145% with Ford. And the crazy thing is that I played a bullish flag. Ford went up off the news, it pulled back to support, and then it just took back off to the upside. So once it was forming that the second run to the upside, I put the 83.42 in, and I waited for a second. It skyrocketed, and I made my $12,000. I got out. I almost broke my phone. I was just smashing the button, like trying to get out. I was sweaty. I was tired. But this is one of my biggest trades to date. Again, $600 right here, $611.67, all the way to 475 from just trading options. The crazy part too is that I put this trade in the Discord, but it was 2 days before Christmas that I told everyone about this trade. The crazier part for me is that in my spending, I had already spent most of my money for the year. I had $640 just sitting in my buying power, and I put 611 on this option and ended up with almost 21K. So crazy things can happen. But I was playing pattern after pattern, and I was getting it right week after week after week, just back to back to back to back to back. That's when I knew, okay, I actually know what I'm doing. It's not a fluke. Sometimes you may see numbers like this when you just throw something in on a stock or on a call option and it explodes for you. But this was actually two separate trades, calculated, watching the news, paying attention to the stocks, so on and so forth. But any questions so far?
Ladarius, I have a question. When you go in and say you win like your first trade, how long do you have to wait for the funds to settle for you to flip it to the next one?
My funds in this account, my Fidelity, it settled immediately.
Nice.
So it depends on how you have the account set up. So if you have a margin account, so with Fidelity is weird. Like they have a margin account that's called margin, which allows you to use margin if you want to, but you can turn the margin off and it's still called a margin account. But the ability that comes with that margin account is that your money is ready to use immediately. So in the first trade where I turned the 600 to 8,300, it was ready to go immediately. So after I took the money, the next day Ford had their news. I went right in and did a day trade and got out. Does that answer the question, Yvonne?
Absolutely. Thanks.
No problem. We got a question in the chat. Let me see. What was your trigger to enter the trade? Have you been able to reproduce the same results? My trigger to enter the trade. So I haven't been able to reproduce a 12 or 1300%, followed by 145%. No, I've been able to get 600%, 650. I haven't seen a 1300% from a trade that I calculated. But what triggered me to take the trade was that Tesla was going down, but they had a lot of momentum being built up because of new adjustments that they were making at the Gigafactory that could help them make more vehicles. So I knew that they were going to beat the vehicle numbers, and I knew that the numbers were going to come out. Tesla announces their numbers the first of the second, I would say, like the first Monday of the quarter, pretty much. So I knew it was coming, and Tesla had been making a falling wedge. And if a falling wedge sounds like a bearish pattern, but it's actually a bullish pattern. So Tesla had been tanking for a while, and I said, okay, cool. It's sitting right on support. I'm going to go ahead and get in, and once it bounces off support, I'll go ahead and hop out. I didn't think it was going to run the way it did. I thought that Tesla was going to bounce. It was at about 950. I thought Tesla was going to go to about 975. Tesla was skyrocketing for like 2 weeks straight after that. Like when the first day I bought the contract, the next day I was at 1700. So I went from 600 to 17, about 1750 the next day. That's when I knew, like, okay, wait a minute. I have a month left on this contract. I'm already at 1750 from 600. Let me do my research. Let me figure out what's going on with the stock. But yeah, it was just making a massive falling wedge, a lot of bullish momentum. And it was right before Christmas. Nobody wanted to buy the stock, and I hopped in. And once it started to take off, people piled in. The implied volatility started to pile up on top of my option contract, and I just held. I just kept watching the news and playing off news. Does that answer your question, Ross?
How long were you in this one for, LJ?
14 days to be exact.
Nice.
14. It was some of the longest. I didn't shower for like 3 days in the middle of this 14. I know it's TMI, but I was that locked in on this trade. Like I was really locked in. I didn't go to work for a few days. Like I was really like just trying to make sure I didn't mess this trade up. And it was kind of scary. At one point, it went up to like 5,600 and pulled back to like 3,200. And I was like, I messed up. Okay, I just lost $2,000. All right, I'm done. And then I was like, wait a minute. I looked at the chart again. I'm like, but that is a bullish flag. Let me just wait. And the bullish flag played out, and it popped back up, sent me back up to like $6,000, and then it just ran from there from 6 to about 8,000. Actually, when I took this out at 8,300, that same day that I took profit, this option contract was worth about 11,000. But I was like, I went from 600 to 8,300. I have to get out. I didn't want to just keep playing that game. I was done. So yeah. Gerald, you have a question? I see your hand is raised, Gerald. Oh, no question. Okay, cool. Any other questions about this one? Again, for those that are just coming in, I was basically giving them a run through of my options course. So I do have a simplified options course that talks about options and strategies and things of that nature. So we're just doing a brief run through. Again, I do have the course to where I actually sit down and take time to go through every slide with detail. But again, just wanted to do a brief overview of what it is to trade options and what it looks like when you do it the right way. But these are a few of the slides here. But yeah, if I don't have any other questions, wait, let me see. It's the last slide. It's a $20,000 trade. Proof. Oh, these are resources. Same resources that I use today. Investopedia, stock charts, tip ranks. You can use stock charts or TradingView. Tip ranks, Robinhood, Wikipedia, Yahoo Finance. That's a lot of the things that I use when I was trading Tesla and Ford when I made the 20K. And that is that's the end of the course. So let me stop sharing my screen. And if I don't have any other questions, I'll go ahead and pass it over to Mark. And if you have any stocks, you can post the tickers in the chat and he'll chart them out for you.
Ladarius?
Yes.
I'm just wondering, today I was looking and I think all three indices are having like an ascending wedge going up. And so like the Dow, the NASDAQ, and what's the other one? Just slipped my brain. But anyway, so does that mean it's gonna like drop soon? Or because I know SPYs is on fire. So I didn't know if you guys could take a look at that and tell us your thoughts.
Yeah, Mark can take a look at it. I think that the SPY, again, right now I have the SPY going to 600, but I think from last week the SPY is hot. We could see some consolidation or a slight pullback, and then we're going to see a move up. Also, don't forget that we have earnings, and I think that Microsoft is going to be the one to carry the SPY to the next level. And I'll talk about that when I go over my picks. But yeah, Mark, if you want to look at one of those, or Yvonne, if you just put can you put the tickers in the chat for Mark, and then he can take a look at those for you. But yep, I'll go ahead and pass it over to you, Mark. And let me check on this fire alarm, make sure it's a false alarm.
All right, appreciate it. Okay, once, like I said, we're starting to get some put in. Yeah, if you can just post them inside the chat, I'll take a look at it and see what's happening. Give me 1 second. Let me share my screen. Perfect. All right, Oxy. All right, so let's start with Oxy. All right, so just looking at the weekly, we can see that Oxy is currently, the past few weeks, maybe about a month, we see that Oxy has been testing the 200-week moving average. And we know a lot of times when the stock price tests its moving averages, it's going to treat it either support or resistance. Since the price is above the 200-day moving average, it's treating it as support. So right now we can use that as our support line. And we can say, okay, if Oxy was to continue to dip, you can see it get back to about $51.36. So that's going to be our support. We can have resistance here, we can have resistance here at about $57 because that's our 20-week moving average. So we can have resistance here at about $57.61, or we can just keep it up here and call it about $59. Since this is a moving average, I will bring it down a little bit and call it. I'll just put it here, and it's sitting at about $57. Is going to be where our resistance line is. So it's relatively close to the resistance line. Looking at the weekly, this could be making a inverted head and shoulders. So we have the first shoulder here. Price came down, created the head. See prices rejecting the 200 days coming up. We could be seeing this trying to test our resistance level, and then maybe it may pull back a little bit, back to about $55. And then from there, we can see it try to break out and trend back upwards to about $64. So all in all, we could be seeing Oxy trying to make it back to $64. Again, that may take a few months. It may take all the way to the end of the year, maybe even longer for that to happen. But overall, looks like it's creating a head and shoulders pattern. Looking at the other indicators, it's giving me a setup to say that, okay, Oxy is about to start to trend upwards, right? So we have the stochastic RSIs. It was in that oversold region and started to point up. You see it's getting back to the neutral zone, and it's trying to get back to the overbought region. RSI level is a little bit low, sitting at about 43, pointing downwards just slightly, but we could start to see that turn around and trend upwards. And then what I like is that the MACD, while my buying pressure, the blue line, is below the selling pressure, which that's normally indicating that the stock price is going down in value, we can see that our MACD, the buying pressure, is getting really close to having a crossover to the upside, to where it's crossing over the selling pressure. And with that, that's going to cause the stock price to trend up as well. So we can see anytime the blue line, buying pressure, is above the red line, the selling pressure, we can see the stock price is going up in value. So that could be happening next. And again, with that happening, that's going to be completing this head and shoulders. I'm thinking what's going to probably happen is we'll probably see it increase back to the resistance at 57, maybe $59, and then we'll probably see it try to pull back. And then from that pullback, once it starts to increase again, we're going to start to see that MACD crossover. We're going to get that run that we were talking about back up to $65. So that's on the weekly. That's what it's looking like. Again, if we wanted a trading range for this week, we can see Oxy go anywhere from $57 to $58 to the upside. And then going down, we can see it maybe trying to test 51 or 50. And then that's going to be that 20-week moving average. Again, we can see that when it tested this area last time, it rejected that price and skyrocketed up a couple dollars, maybe about $5, because Oxy doesn't move that fast, right? It's a slow growth company. So it shot up about $5 and it started to pull back from there. So that's on the weekly. Let's look at the daily. and see if we can find anything on the daily to tell us which way it's going to go. All right. So looking at the daily, stochastic RSI is high. RSI is in that sweet spot. I would be just a little bit careful with the daily because of where that stochastic RSI level is at. Because it's in that oversold region, I know it eventually needs to come back to that because it's in the overbought region, I know eventually it needs to come back down to the oversold region. Now we could see this get back to 57 with that stochastic being high. But at this point, I would just be a little bit careful if you're trying to use this as your bottom, because it looks like this needs to cool down now. Again, you can probably see it get back to 57, 58. And then from there, we'll probably see it pull back. And that pullback may get us back to $55. So I would just be just a little bit careful. And then the fact that we are testing a moving average, and you can see we're rejecting that 50-day moving average. We're rejecting it a little bit. I would just be a little bit careful and wait for it to establish its bottom and for me to say, okay, this is the bottom, I can get back in. We may see this reject and come back down to 51, right? And then at that point, that may be a good time to reevaluate this stock and then potentially get in, because we know that at this price on the weekly chart, that's the 200-week moving average. And we can see from the daily chart, this was a strong level of support. So we can, if it does pull back and reject this support, I will feel more comfortable getting into that trade and saying, okay, well, I know on the weekly, we're saying they can potentially get back to 64. I think on the daily chart, I have found the bottom with this rejection. Then that'll make me feel more comfortable with getting in at that time and just waiting for it to reach back to 64. And again, that 64 may take a while for it to get there. So I would, if you're trying to play an option play, I would stretch it out for maybe to next year, just so that I can have that time decay on my side and I don't have to worry about every single day my contract losing more and more in value relatively quickly. Any questions about Oxy? Sure. Okay, all right. Let's move on to the next one. All right. Energy stock. Perfect. So the energy sector, as you can see, has been going down this year. Right now on the weekly, we can draw our support. Sitting here at about $39.50, about $40 is $39.50 to $40. It's a nice little support to have. So if this stock was to trend down, again, we're probably going to see it come and test about $39.50. Now, for my resistance, it's currently testing resistance. We can say resistance is going to be in this cluster of moving averages, and we're going to use the 20-week moving average because I know it's going to 9 times out of 10 try to bounce off of that. So we can have support here at about $44. $45 could be a nice level of resistance, for this stock. If it was to break above that, again, it's going to move relatively slow. It has a lot of moving averages. I would personally wait until it breaks above all of these moving averages before I actually get into a trade, just because I know this is a cluster of moving averages. This is basically all 4 moving averages getting closer and closer to one another. So I would just wait until it breaks above those moving averages before I get into the trade. So ideally, what I'll be waiting for is for wherever this, because this is not my 200-day moving average, this is my 100-day moving average. Whenever it breaks above this top moving average, that's when I'll start to look for the trade. And I'll then start to try to establish my support and resistance from that point, or my resistance from that point. And now, if it was to break above the resistance we have here, it's probably just going to come and try to test at about $50, because that's the next level of support. So I'll just be on the lookout for that. It does look like from the chart, it's looking like it's finding this bottom and it may try to have a run. And then that run may take for the next year, we may be seeing energy stock, at least this one, trending upwards. Just looking at the technical analysis, because my MACD, I'm about to have a crossover to the upside. My stochastic RSI level is in a nice spot, and the RSI level is also in a nice spot. But I would just want to confirm that it breaks above all those moving averages before I actually get into a trade, because we could see this reach this moving average and then quickly start to trend back downwards and try to come back to support at $39 or $40. If I was to look at the weekly to see how it should be moving this week, you know, yes, the stochastic RSI is pretty high. RSI level is not high, but it is reaching its basically its peak for the current trading period. We can see if we look back at the data from here, we can see for the past, was that a few months since July, we can really say since May, or excuse me, yeah, May, it hasn't went any higher than about 57 in the RSI. So basically it's been treating about 57, 58 as its peak, as its over BART value, and it's been pulling back from there. So because the RSI, the stochastic RSI level is high, and then we have the RSI level reaching this quote unquote peak that it has right now, or the oversold region that we can just draw right here. It's safe to say that this is probably going to start to pull back and try to come back to this $40 range. Now, before that, we may see it could have just enough juice left just for it to come and try to test this $45 range, or $44 to $45 range, before we start to see a pullback. It is trading in between both of those, in between our support and resistance. So it's right there, just about in the middle. So we could see it come back to 45. But at that point, if you get into a trade and it gets to 45, I'll go ahead and get out of that trade and just wait to see what happens, because we could be seeing this reject at our resistance and start to pull back, just because of how our stochastic RSI level is at our RSI level. Stochastic has been in this oversold region for a little bit, quite a while, like that's about almost a month, or about 2 or 3 weeks, where it's been sitting at that over bought region. So I would just be a little bit careful trying to trade this to the upside right now, and I will wait to find that good entry point. So I would just reevaluate this. Any questions? First solar. Next one's first solar. FSR. All right. First solar. All right. So we're looking at first solar. We can say that we can draw support, or excuse me, resistance here at about $242. That's where it could potentially get back to. And then we are currently testing our the level of support. You can see here at about 208.50 is our level of support. And if it was to break below that, our next level of support, we already had these lines drawn, is going to be here at about 190. So that could be where we could be seeing First Solar get to 190. And then from there, we'll want to reevaluate to see what happens. If it breaks past 190, we're probably going to eventually end up seeing First Solar make it back down to this level at about 143 potentially. Again, that may take a while for it to get there, but if it breaks that support, that's where I'm thinking this is going to be heading to. Looking at the stochastic RSI, has a little bit more, it's starting to try to point downwards. It has a little room to continue to go down and get back to that oversold region. The RSI level is pointing downwards and is at that 50 range. So it's still, this still has room to continue to go down. And I see that we had a MACD crossover to the upside that was about to happen. The stock price rejected that crossover, and it's still trending downward. So I would just be a little bit careful. What I'll be waiting on is, can the stock price get back to 192? And if it can, what happens there? If it rejects 192, we'll probably start to see it trend back upwards. We'll start to see it try to come back to this moving average of a 20-week moving average, wherever that's at. That's where it'll probably be trying to get to. And if it breaks below this level, again, we may see it try to get to 178, but ultimately we'll probably be trying to see this stock price get back to this 142 range. Excuse me. And that's on the weekly. Let's check out the daily. See what's happening. All right. So the daily, daily is setting up to where we could be seeing this increase for this week. So this week we could be seeing this try to get back to about 227 as our resistance. I'm going to just clear that. And why I say 227, that's just simply because our 100-day moving average is 227. So because our 100-week moving average is 227, I'm going to treat that as my resistance because that's my next moving average. I know moving averages, they always are treated as support or resistance. So I'm going to treat that as my my resistance. And if we see the stock price go up, that's where we're going to 9 times out of 10 see the stock price reach and then try to reject that area. Now, if it was to continue to go down, again, it's testing the 200-day moving average. So that's the next place we can just draw our support a little bit lower and say if it trends down, it's going to be coming to try to test about 200 as our moving average. Our 200-day moving average is $200. So that's going to be where it's going to come and try to test if it was to pull back. Looking at the daily, we could see it try to test 200 and then reject from there. But it's looking like we're probably going to start to see this stock price turn green. So we could be seeing this get back to 227. Just looking at the stochastic RSI, it is in that oversold region. Yes, it can stay under there a little bit longer, but we always know that with the stochastic, what goes up must come down and what goes down must come up. So basically, because this is down, eventually this is going to start to want to go up. So we know that eventually this is going to try to get back to that overbought region. And that could begin to increase this week. And with that, if that stochastic is going up, again, that MACD where my buying pressure is going to start to flatten out and start to point back upwards. And it's going to get close to a crossover to the upside. So we could be seeing that happen. And again, if we have that rejection, we're going to 9 times out of 10 be seeing First Solar this week try to get back to 228. And then from there, if it breaks above that, it's going to then be trying to get back to about 240. And we can draw it even tighter and say that try to get back to about 235, 236 as the next place that they're trying to get to. Any questions? Let's get the SPY in 4 hours. Let's take a look. Let's see. SPY. All right. Yeah, so the SPY, let's just start with the weekly and then work our way to the 4 hours. All right, so on the weekly chart, again, we're hitting basically all-time highs with the SPY. So anytime we're in all-time highs, I just like to treat it in $5 increments. Current price is sitting at about 578 is going to be its next price. So, or excuse me, it closed at 579.58. So about 570, about 580 is currently where it's at. So it is testing resistance. Looking at the weekly, the RSI level for me is really high. It's hitting that, almost hitting that oversold region or overbought region, excuse me. We could see a pullback happen, or we could see this go back up to this 70 RSI level. But 9 times out of 10, eventually we're going to start to see a cool down happen. Now, is it going to pull all the way back down to 430? I can't tell you if that's going to happen, but we could see some type of pullback happen. And with that pullback, if it starts to pull back, the first place is going to come and test again is that 20-week moving average, which is sitting here at about 552. And then if it breaks below that, the next place it can go and test is going to be this 100-week moving average, which we can draw relatively close, sitting here at about 520. It's going to be the next place it can drop. We could continue to just see it as we can see previously. It's been just testing this 20-week moving average and bouncing off of it. So we could be seeing that happen. Again, it's been running hot for quite a while now, for about almost a year. It's been on this uptrend. So we should be seeing some type of pullback happen fast. Again, I can't promise that it's going to get all the way back down to this 430 range, but we could be seeing this get back to about 520 to maybe $500. We could be seeing that happen. Let's look at that daily, see if you see anything. Again, it's getting on the daily. It's getting relatively high on the stochastic RSI. RSI level is almost in that overbought region. RSI is really close to being overbought to the 100, and we are currently testing that again at resistance level. So we could be seeing that pullback. With that, once it starts to pull back, we're going to have a really quick crossover to the downside on that MACD. I don't think the MACD is going to gain a lot of separation right now. So with that, once we start to see this pullback happen, we'll see another crossover on this MACD, and then that could be the crossover that we need to see this to see the SPY start to trend downwards and start to begin that downtrend of the bearish market that it could be in. That's what I'm seeing. Any questions on the SPY?
You think it's going to hit 600 before it pulls back, or you think it's going to pull back like this week?
Yeah, so me personally, I would just treat it as $5 increments. So I won't say it'll go all the way to 600. What I think is if it does trend upward this week, the next place it's going to hit is probably about 585 if it was to continue to go up. And then from there, I want to see if it's rejecting 585. That'll be the next place that I say it'll potentially get to. So if this week, if it's trending upwards, we'll probably see 585. That's the next place. But again, once the stock for me starts to hit all-time highs, I just instantly say, all right, in my head, $5 increments. So if it's at 580, the next place it can get to is 585, and then I'll try to see what can happen from there. And then if it rejects and pulls back, I know that it could then go back down to about 580, 575. Yeah. Any other questions? Hey, all right. All right. Perfect. So this is another stock that's reaching all-time highs. So again, $5 increments is what I like to treat it as. Can't even tell it. So closing price was 416. So it broke. We talked about this previously. I'm not sure if it was last week or maybe a few sessions ago, and it broke past the resistance we had, and I was creating a new resistance at about 417, 418. We call it 420. It's the resistance level. So from here, I'm looking to see, is it going to reject this level? So it's been trading upwards for quite a while now. You see that the RSI level is high. We have that stochastic RSI. It's getting close to that over BART region. So I would just be a little bit careful if I'm trying to do call options or if I'm looking for an entry point. I may wait on this. I wouldn't necessarily get in just now. I will wait for it to pull back a little bit, especially if you're looking to hold it long term. You can probably find this at a better value or a discounted price from where it currently is at. If it was to reject this price, again, it's going to come and try to test this 390, 400 range, 390. Yeah, I have it at about 400. So it'll come and try to test 400. If it breaks below that, it's then going to come and try to test this 380 range. So about $10 differences on this one. And the weekly, again, while we have a crossover on the MACD to the upside, that's the stochastic RSI level. And then the regular RSI is making me a little bit skeptical on how much further it can potentially go. This could continue to go up, but we know it's not going to go all the way up forever, right? It's going to pull back sometime, and I'm thinking this pullback will happen eventually. And with that pullback, again, this week we may see it get back to about 400. If it breaks below that, we could see it get back to 380. Ultimately, we could see it start to trend back down and try to test this 20-week moving average. And then once it hits that 20-week moving average, we can then start to evaluate and say, okay, it's testing the 20-day. Can it reject the 20-day? If it does, then that may be a good place to go ahead and buy in and try to buy in once it rejects this 20-week. Because we can see when every time it tested this 20-week, it used this line as its bottom, and then it just continued to go up. Came down, tested this, went up, came down, tested it again, went up, came down, went up, and vice versa, and so on and so forth. So again, we could be seeing this pulling back and trying to test this 20-week moving average. And then from there, that's when I'll feel more comfortable to get into a trade, especially for like a long-term hold or a swing trade. And that's on the weekly. If we look at the daily, all right, we can see from the daily, RSI level is in that overbought region. Stochastic RSI level is in that overbought region. Again, it's testing resistance. 9 times out of 10, this is about to start to pull back. And then that pullback can get us back to 395. And then if it breaks below that, the 380 range is probably where it's going to go. You do have that MACD it was about to cross over and it rejected it. So that we did have that. But again, I think next time, once it starts to trend down, we will see that crossover, that MACD crossover to the downside and start to cause us to go down in value. So I would just be a little bit careful. If you was in this trade, you got in at one of these low points, this may be a nice little place to go ahead and shave some profits. I'm not saying you have to get out the entire trade, but just to go ahead and take some profits. And then if it pulls back, you can use those profits to buy the dip and add on the shares as you see fit. Any questions? Crowd. All right. So looking at crowd. Now crowd, looking on the weekly, this is setting up really nice to potentially get back to about 390. All right. And why do I say that? Again, we're testing resistance here. If we was to break above this resistance level, because we have already broken above the 20-week and it closed above it, if we was to break above the resistance level, where the RSI level was at, sitting at about 54 pointing upwards, and where my stochastic RSI level is at is pointing upwards in that neutral zone. This is looking really nice paired with that MACD crossover. We just had a MACD crossover to the upside where my blue line just crossed over my selling pressure, the red line. And looking at all of this, is showing me that this could potentially be a bullish trade. So what I would be looking for is, can we break past my resistance level that I drew? Because I drew this resistance level, I probably drew it somewhere where this resistance was once the moving average. So if it can break above this 320 range, we're going to 9 times out of 10 be seeing us get back to 390. And that's all I'm waiting for. I'm waiting for a nice break and we can hold above 320. Once I see that, I'll feel more comfortable to get into the trade and trade it up to about 390. And that's a weekly, so it may take 2-3 weeks, maybe 4 weeks for it to get there, maybe 2 months. I can't tell you how long it's going to take, but overall, looking at the indicators, this is showing me that this is about to become bullish. So if we look at the daily, we can see, boom, from the daily. So we have a little bit more room on that stochastic. RSI level is getting in that oversold region. And you can see that we have the stock price tested the 200-day moving average, rejected it, came up, it tested it again, and it broke above it this time. So we can have it stay above this moving averages. Again, that probably will cause this stock to break above my resistance. And then that's going to start this wave upwards. Now, again, we do have a little bit more room on that RSI, the stochastic RSI, to get us in that 100 range. What I'm waiting for is, because on that weekly, I wouldn't try to treat this as a day-to-day trade. I would be more so looking for an entry point. So this could be a nice little entry point to where it breaks above it. And then once this starts to cool down, it'll probably come back and try to just retest this 320 range, right? So we may see it break above 320, trend upwards a little bit, and then pull back. So we may see stock price get to about, let's say 350, because that's the next level of support. So we may see this stock price get back to 350. And then from there, we may see it try to cool down, reject, and then come back to this 320. So if it breaks above 320 for this week, we could be seeing it get to 350. Now, looking at the weekly, ultimately, the next few months, we could potentially see this get back to that 380 range, 390 range that we was talking about on the weekly. But looking on the daily, next place is going to not probably go to is about 350 if we was looking at it to go up. Now, if it's rejecting this area, it's going to probably come back to about 300 and try to test these moving averages, because this is my 100-day moving average and my 200-day, which are two strong moving averages, and they're relatively close to one another. So that's a strong and heavy line to break. So 9 times out of 10, we see this pullback. We're just going to see it get to about 305, 300, and then reject from that point. Any questions on CrowdStrike? Check the chat. Perfect. All right. So we have one more stock that I see that was put in there. Start with the weekly. Snowflake. All right. So let's draw some support and resistance. This is our first time looking at Snowflake, it looks like. So support that we can draw here, I'm going to draw support down on the weekly at about 110, 109, 110. It's going to be a nice level of support. We can see for resistance wise, it's testing the 20-week moving average. So that's going to be our first level of resistance. It's currently testing resistance. Now, if it was to break above this level, where is it going? It's going to be going to about 140. And the reason why I picked 140 is just because if we look back, you can see here it got relatively close. You see back here it had three separate touches where it rejected this level. It rejected here, it went up. It rejected here, it went up. It rejected here, it went up. Even back here, we can see the stock price went down, rejected this area, shot back up. It pulled back and tried to get relatively close to 140, and it rejected that level as well. So 140 is going to be my next place for resistance. So if this was to break above 124, we will be seeing this stock price Snowflake get to about 140. Looking at my indicators, looking at the RSI, it's just a little bit outside that sweet spot, that 45 to 55 point upwards. You see it's at 43. I like that. My stochastic isn't in that oversold region just yet, so we still have room. Over BART region. So we still have room for this to go up to that 100 range. Then we just had a crossover on the MACD to the upside. So for me, this is looking like okay. Yeah, if the stock price gets above 125 125, we'll be seeing this get to 140. So I'll feel more comfortable getting into that trade. And that may take a week or two, maybe a month for it to happen, just because this is on the weekly, so it moves sometimes a little bit slower. This stock does have weeks where it has nice volatility. It has huge spikes, as you can see. We have some huge, nice size candlesticks. We also have some nice size red candlesticks. So we could see another nice size green candlestick this week. Let's look at the daily to see if we can make it to 140 this week. All right. All right, so looking at the daily, can we make it to 140? Potentially. This may be running a little bit hot right now, looking at where that stochastic RSI level is at. Again, this could stay in this 100 range for a little bit longer. We see that it has its time there where it stays there for a few days, a few weeks. It can stay there. So we could see this get to 140. It is testing this 100-day moving average, excuse me. So I would just be a little bit careful. Before it gets to 140, I know it needs to break above that 100-day moving average. If it can break above that 100-day moving average, I will feel more comfortable trying to get into a trade to 140. If not, and it rejects it, then all I'm doing is I'm waiting for it to find this bottom. And once it rejects that bottom, that's where I'll go ahead and start to get into my trades for the longer term trade. Because remember, we said looking at the weekly chart, we could see this potentially get back to 140. So while it may not get to 140 this week, we may see a pullback happen. And with that pullback, if it was to reject, the first place we're going to come and test is about 116. If it breaks below that, we'll probably see it get back to the 110 range. And then each time it's testing those areas, I will be looking to see what's happening. If it gets to 116, I will come back and reevaluate my chart and see, okay, where are all of my indicators? Is my stochastic RSI level in the oversold region? If it is, okay, I'm looking for a rejection. I'm looking for a potential place to get in. I'll be looking at the MACDs. I'll be looking at, I'll be looking at the MACD and the RSI level as well. You can also throw in the VRVP as well if you need to. But ultimately, again, all we're looking for this week is, can it break above this 100-day moving average? If it does, we could be seeing it get to 140 eventually. If it doesn't, we'll probably be seeing it get to 116 or 110 this week. Any questions?
No, I'm good. It's got a gap fill also on there.
Say it again.
Is that a gap fill? It's got to fill up.
Where, right here? Are you saying right here?
Yes.
Yeah. So it can fill that gap. Yeah, this is a gap that needs to fill up. Again, this is just because this day it was high, and then the next day it opened up really low, so that's why that gap is there. If it was to fill that gap, like if it breaks above this 100-day moving average, it's going to fill that gap up relatively quick. It's going to get back to that 135 if we can see it break above that 100-day moving average, because that's a strong level of resistance at that point.
Thank you.
Absolutely. Well, good questions. Let's check the chat. Perfect. So what I'll do is I'll pass it off to Ladarius so he can go over his picks for the week. I appreciate y'all.
All right, I appreciate it. All right, got quite a few. I got like 1, 2, 3, 4, 5, 6 that we're going to be looking at today. A few of these we're just going to be reviewing, but I'm going to start with the best one first, in my opinion. Let's see, Ty. Oh, Ty says she dropped out. Mark, can you keep an eye out for Ty? Her note taker is still in here, but she's trying to join back in. There she is. Boom. Okay, cool. Alrighty. Let me share my screen. All right. First one on the list is Microsoft. Microsoft is undervalued right now. Microsoft should be about $600, about $550 to $600 right now, according to Simply Wall Street. And I think that we could see a kick to the upside once we go into earnings. So earnings is on the 30th of this month, and it looks like we've been having some consolidation, even a pullback. We had a crazy run up to let me reset it. Oops. Let me just zoom in. We had a crazy run up here to 440, to where we had a harsh rejection. After the harsh rejection, it took us all the way back down to about 405 before we pull back up. I think that, again, going into earnings, I think that we can see another pop back up. The reason why I'm saying that is because even though we just had a nasty pullback, we've had one before and then came back roaring to the upside, right? So we have higher lows, right? This is a low, this is a low, this is a low. So these lows are all higher, and then we have higher highs. This is a higher high, higher high. The next pop could be a higher high to about 450. So there's a massive opportunity, in my opinion, on Microsoft. One of the most undervalued stock in the S&P. Aside from Meta, I still think Meta is undervalued, but right now I think that Microsoft is more undervalued since Meta has been climbing lately. Meta is still a nice one to get in, but right now, again, Microsoft, these lows, these highs are telling me that going into earnings that we could see more of a move to the upside. Also, if we look at the indicators, look at the RSI. RSI is at 45. It's trading, it's pretty much parallel, it's trading sideways. I mean, I'm sorry, it's not parallel, it's horizontal. And then if you look at the MACD, we have some softening on the MACD for a crossover to the upside. It's getting there, slowly getting there, but I think it's best to get in before it moves. And then once it starts moving, it's just going to take off. And then if you look at that stochastics, the stochastics is slowly climbing. We're at about 36. The next target is here at 50, and then 80, and then 100. So give me 1 second. Oh, I thought mouse died. Okay. But yeah, again, Microsoft on the 1 day looks really nice, undervalued. Everyone is paying attention to Meta or Tesla or Nvidia, but Microsoft is an undervalued AI play that I think people are forgetting. And OpenAI just got another lifeline. So we can't forget about this one. Again, I will put a star by this one on my watch list for the week. This is, in my opinion, this is the stock of the month. I know it sounds crazy going into earnings because anything can happen, but I will say this: if this drops on earnings, I'm buying this hand over fist. Shares, options, you name it. If this goes under Microsoft under 400 when it should be about 575, 550 is a steal. Easy steal. Again, it's an undervalued AI play that I think that people are ignoring for whatever reason, but they've been making some crazy moves, buying nuclear power plants to power their AI. They have large plans, and again, it's Microsoft. If anybody can make it happen, Microsoft can make it happen. But let's take a look at it on the 4 hour. I haven't even checked it out on the 4 hour myself. Look at it on the 4 hour. We have a 45 or 44.5 on the RSI. Trading sideways still. On the right on the support, we have a MACD crossover that we just got through on the 4 hour, and then we're at about 77 out of 100. So we still have space to move to the upside on that 4 hour. Look at the 1 week. Look at the 1 week. It looks even better in my opinion. We pulled all the way down, and we've just been skating on the top side of this 50 MA. You can see we popped up, bounced here, popped up, bounced down, and then we should get another test at about 440 to where I think we can break through, and then we could be seeing 450, 460. Just putting that into numbers, if you look at earnings could be 5-10% pop. Easy move. Let me see. We have some questions in the chat. Microsoft, which option strikes would you play? If I'm looking at Microsoft, I would go in the money. Earnings is a ways away. Earnings is about 2 weeks away. I would go in the money, and I would not try to play earnings because I think that after earnings, this could, again, I'm looking at about 450 after earnings. If this goes under 400 and we see Microsoft at 375, 350, that is a steal. Again, that's what I'm looking at. So the option strikes that I'm looking at, I would be looking again in the money, or I would be looking at the highest. I'm looking at no higher than 450. And if I'm looking at that, honestly, I'm setting it out further. But I think 415, 420 would be the best bang for your buck, just to patiently wait and to set it out for a few months to capture the whole run that it could go on. Let me see. Next question. Do you have how do you value Microsoft at 500? I can show you simply Microsoft, simply Wall Street. I like the way that they run their numbers and metrics. Let me see. Can I bring it up? I'm looking on my other monitor. 1 second. Here we go. All right, so this is Microsoft on Simply Wall Street. I like the math and the formulas that they use, so I always use their site. Tip ranks is nice, but some of their formulas I didn't agree with as far as like how they value their companies and things of that nature. But there's a lot of rewards for the stock. You can see they're trading 27.4% below the estimate of fair value. Earnings are forecasted to grow above 10% at 12%. And then earnings have grown 15% per year over the last 5 years. And all of the analysts are in good agreement that the stock price will rise by 20%. So 20%, and we're pretty much at what, 400? It's about $80 pop, puts us right up against 500. So you want to go through all the breakdown of the information, price history, performance, so on and so forth. You can do that. And then you can get down here to where you can actually see the how they have it undervalued. They think the fair value is about 573 if it's trading the same way as peers have been trading. And you can see that Microsoft, this is the peer. I'm sorry, I said peer. This is the price to earning ratio versus their peers. And then you can just pay attention to see what it is here. But I like this breakdown, 573. Again, I think about 550, 573. It's nice. Again, I'm saying 550 or 575 if it was fairly priced, but we know that the market is not fairly pricing all of the stocks all at the same time. But again, Microsoft at 416, great buy. Microsoft under 400 is a steal, but yeah. And technical analysis wise, the chart is looking great. On the weekly, again, skating on the 50. RSI is nice. The MACD has been pulling back, but it hasn't been a major pullback. And then the stochastics is slowly pulling back as well. But as long as we stay above 20 on the stochastics on the weekly, we should be in good company. Yvonne, you had a question?
I was asking it.
Oh.
Microsoft over Netflix and SPY, if you had to pick one.
Yep.
Oh, good question, Yvonne.
Yep. Yep. I would say Microsoft over Netflix and the SPY. The SPY, when we called it, what we talked about in our option session, 2 weeks ago, Yvonne, and you asked me what was the closest play that I would take, and I said the SPY. The SPY ran. So I think the SPY still has some gas in the tank, but it needs to pull back. But Microsoft right now, and then I mean Netflix too. Netflix has been running as well, but Microsoft hasn't been receiving the same love. And I think eventually people are going to say, "Hey, wait a minute, we can't forget about Microsoft, especially when it comes to AI." So I think Microsoft is. I would pick Microsoft over Netflix and SPY right now. That help?
You.
No problem. Cool. Any other questions on Microsoft? And again, if you all aren't in the Discord, we do have a 14-day free trial for you to try it out. The intro to option sessions on Wednesdays are great. We have great discussions. It's a great time for people to just hop in and talk options. We chart options. We talk about the different metrics that build options, so on and so forth. But a lot of these plays that we set up and that we may show now that have already ran, we watch them during the week or in the option session. So I recommend, again, if you haven't tried it, to check it out and see what you all can get from it. But all right, do I have any questions on Microsoft? Let me check the chat. And nope, looks like we're good. All right, let's keep moving. Target is moving. I think we talked about Target in the Discord as well. We talked about Target. We talked about Shopify, and we talked about Affirm. Target is doing exactly what I thought it would. It is moving up. You can see this nice double bottom that it's starting to make. Started here at about 167, came down. What is this? To about 147, came up in the middle to test our support, came down and came back up. Again, I said a double bottom is one of the easiest patterns to trade, especially if you're trading options. And this is the formation that you want to see. This is a ready to trade double bottom, right? The bottom hit, came up, bottom down again. And let me add some lines here and remove the VRBP for a second. Remove the MA ribbon too. So you can see the W pattern that is forming, right? Down, up, down, up. And this is 4 days of green. 1, 2, 3, 4 of nice green to the upside for Target, and is breaking that middle resistance that's been a choking point. That resistance has been tough since April. So now if we break that, we can start to go to the upside. What I'm waiting for is a break at 160. After 160, then we're looking at about 165. After 165, we should be brushing up against that 168 to 170 range. And then after that, we can slowly make our way up to the 170 to 50. And then I think that at that point, we should have enough momentum to get us all the way up to about 180. It looks like this could be making an inverted head and shoulders too. This is the head, shoulder 1, shoulder 2. That could take us again back up to about 180. Target is a slow moving giant, but it pays a nice dividend. It's one of the dividend kings that have been paying dividends for over 50 years. So I think Target is actually worth the shares. Do I have any questions about Target? Let me check the Chat, do you do option singles or spreads? Option singles, no spreads. Not at this time. Tried spreads in the past. It felt like driving a manual car every time I had to trade, and I didn't like it. So I just like I like option singles for the most part. All right, cool. Apple. Apple is in a weird predicament right now. But I think that we could see a move to the upside. I want to start on the weekly. We'll go back to the day, and then we'll go back to the 4-hour. But Apple right now, you can see how many lines I have on it, how much I've been charting it out, just setting my support and resistance. But that 20-week is creeping. That 20-week is what, at 219, 220. And right now, Apple has been so desperately trying to break through 230. Like, it's been 1, 2, 3, 4, 5, maybe 6 or 7 attempts at trying to break through this level at 230. And I actually think it's going to happen because this 20 is coming up and it's actually pressing the candles up against that resistance. We keep getting these wicks. Let me zoom in. We keep getting these wicks that gives us a flash above 230, and then it comes right back down. So we get a flash down, flash above, red candle, flash above, it held its temper for a second, and then it pulled down, and then now we're testing again. So I think that Apple is ready to break through 230 finally after a few weeks. And look at that stochastics. That stochastics is at 21. Apple breaks through 230. We could see 240, 250 on Apple as this weekly stochastics start to climb. So that's what I'm paying attention to. I know the RSI is pretty high at 63, but I think that we could easily see a 70, potentially 71, 72 stochastics on the weekly RSI on the weekly for Apple if this 20 continues to press it up to the upside. So Apple is on my watch list for this week. And then you get a better picture here of how many times it has tried to break through 230 and reject. It has just been sitting here trying to break through. And again, recently, zoom in one more time. Recently, in this cluster of candles, you can see that it went up against, and let me move you can see that it went up against that 230 line and just kind of stayed bouncing around. That's why I like drawing these support and resistant lines, because it gives me a clear idea to where the stock wants to be. You can see it's just been bouncing around in here, and eventually it's going to break through. It's making a little baby bull flag right here. Strong move up, consolidation to the side. It rejected, but I think that after this pullback, we should be ready to go for another test at about 230. We test at 230 and we break. Hopefully this time we can stay. Any questions on Apple? Also, stochastics looks great. RSI is kind of pulling back because of the consolidation. The RSI is cooling off because we haven't made a move to the up or downside. We're just chopping. But I think that could change if we break that 230. All right. Next stock, Coinbase. Coinbase is one of the undervalued plays. Right now, it is making a falling wedge. A falling wedge is pretty much what I played when I just showed you all the Tesla play. When I showed you the 20K play where I turned 600 to 20K, the initial play that I got in was a falling wedge, and I played Tesla off of support. I played Tesla off of, it was making this same type of pattern. So pull down, pop up, pull down, pop up. I actually played it from here, played the pop up. It cooled down a little bit and just kept running to the upside. So I think Coinbase is making a falling wedge again, cooling down, popping up, cooling down, popping up. But this is on the weekly, so it may take a little bit more time for it to actually move. But I think after we come out of this falling wedge, we could be back back in the 215 range. And after we get in the 215 range, I think we'll have enough momentum to go back up and test that 260 that we've been rejecting for a few weeks now. So it looks really nice. RSI is at 45. It's pointing up, so that's nice. The MACD, you can see some softening. It's been in the downtrend for a while, but again, you want to find stocks that have that are undervalued and then play them to the upside. Friday was a really nice day for it. It had a 7% day at $12, which is great, and could show that the bulls are stepping in and the sentiment around the stock is changing. And then we look at the stochastics RSI, we can see that it is climbing as well. It's also making its own double bottom here, came down, went up in the middle, it came down again, and is going back up. So what I'm hoping to see is that we get a 50 on the stochastics for the weekly, and then after that we can get a break higher to break above this area here and test this 80 and then go back up to 100. By the time we get back up to 100 on the stochastics, Coinbase is probably again going to be up against that 250 260 range. Do I have any questions on Coinbase? Day. Yep, on the day it looks nice as well. Look at that. RSI at 52 pointing up. We're testing the 50 MA. The MACD was really reset it. MACD was really close to crossing over, but nope. Last minute, it just popped back up to that upside. And then if we look at the stochastics, we went below 20, popped it right back up to 27. And I think that we could continue to trend higher. All right, cool.
LJ, is this one you have to get in early, or should you still wait? And then would you go out, what, 30, 45 days?
Yeah, so this one, from the pop that it had Friday, what I would do, since we're probably going to have low volume tomorrow, I would wait and watch Monday and then plan it out on Tuesday. This one, since we're at what 175, 176, and we're planning to go back up to 250, 260, it depends on what you're trying to play it for. If you want to play it for a longer term hold, then yeah, I would get in sooner than later. And it also depends on if you're using options or buying shares. But yeah, I think that getting in sooner, again, this is a falling wedge that it's making right here. And when it pops and decides to move, again, it just had a 7% day. I'm thinking that we could see another 5 to 7% day in the future as the sentiment, again, switches over from a downtrend to an uptrend. So sooner than later for this one is what I would look at. Does that help you, Vaughn? I think that was your Vaughn. Yeah.
No. Like a week?
Oh, you mean like for expiration? Like what would you set the expiration for?
Yeah, like you're saying wait for it to pull back to go into it, or?
Oh no, it's climbing now. It's making a, so let me look at the day. So if we look at the day, everything actually looks great. So if you get in now, right? If I'm trading options now, I'm looking at the point that it needs to beat for me is this 187.50 line. So it's at 176. It still has space to go up to this 187.50. But on Monday, again, with low volume, you never know which way it can go. But on Monday, we could see a pullback down to like I say worst case scenario is like 166, 167, somewhere here. And then it's going to move back up to the upside. So it just depends on if you're trading options. I know, Yvonne, you trade options primarily. If you're trading options, it depends on how far you set that option out. But if you want to wait and, you want to wait for confirmation to the upside, you could just wait until that 187. We get up to that 187, 186 range and then play it up to 215 and then up to 250. If you just want to wait for confirmation.
Okay, thanks.
Yep. Yeah, with these time and going against time decay, you want as much time on your side. So if you're not kicking it out, to early 2025 as far as an option, I would watch for a pullback, buy the dip on the pullback, and then once it runs, I'm good. Does that help, Yvonne?
Yeah, I've been buying either January or even some March expirations. Yeah. Okay.
Okay. Cool. All righty. Next one, another crypto play. This is MicroStrategy. I think MicroStrategy. Now this one's pretty expensive as far as options go, but I think that this one is now, since it just broke out of Let me show you all. Let me move this for a second. So now that it just broke out of consolidation, it was consolidating for a while. This is what March to October has been consolidating. It finally broke out, and it looks like this green candle cemented the fact that we're now out. We're now in the clear. We're out of this breakout, and it looks like it's now going to run. This is another form of a bullish flag. Again, a bullish flag is simple: strong move up, consolidation or a pullback, pretty much a cool down, and then a pop back up to the upside. So that's where we're getting. And what we could look at, you can zone it like this to capture the flag itself. Started at about $62. So it looks like, excuse me, it's a $60 run. So it looks like this could be going to about 240, 250 to the upside once it actually completes the flag. So keep your eye on this one. Again, if this is running, it's running because of crypto. And if Coinbase is running because of crypto as well. Again, both of these are making really nice patterns. A falling wedge, which that's the pattern I made the most money from. And then it's making a bull flag, which is the easiest pattern to spot, in my opinion. We have both of these set up on crypto play. So I think patience is key here, but both of these are showing really good bullish signs for moves to the upside. Questions on MicroStrategy. Again, same idea and same concept with MicroStrategy that I have with Coinbase. All righty. Last one of my favorites, Transmedics, TMDX. So TMDX set at, what is that, 175 for a minute. It pulled down to this low at 134 and ran all the way up to about 165, 167, and then pulled back down. So it looks like it could be forming a double bottom. So we have a bottom. Let me put the line in. And let me clear some of this up. So it looks like this is a really strong support zone for the stock. You can see how many times it touched it and bounced and went higher. It came here. It came crashing down from 175 to 130, and then it bounced and shot right back up to 165. Came down, crashing again, hit 134 again, and I think that we're going to be bouncing right back up. So this zone is a tough zone. This has been a buy zone for a lot of investors seeking value. And I think that we're doing the same thing here. You can see how many candles we have that just chopped for the day. Like it pretty much didn't do anything Friday. It moved 71 cents and it's $135 stock. So really nice setup that it's making. This is a great time to buy. A lot of people are asking me like, oh, you know, you're right about Transmedics. It's too expensive right now. When do I buy it? A good point to buy, I said, was 135. Is at 135 now. Again, we could see if it drops even lower to 130, that is even more of a buy, because then I think we'll have a harsher rejection to the drop to the downside and should be coming back up to 150. So my first target to the upside is 150. After that, I'm looking at about 160, and then I'm looking at 168.50 in this area. So Transmedics, nice long-term stock. Again, I think this is a $300 stock. And then if we look at the RSI is at 38, which is low for Transmedics. Again, if we look back here, or not back here, when Transmedics was at 175, it was up against 67. If we look at the MACD is crossed over to the downside, but we're seeing some softening. And then if we look at the stochastics, it is really low at 13. So that's why I'm saying that this could be a good long-term swing, or mid to long-term, depending on where you hop off the boat. But I think that this is shaping up to be another nice play back to the upside. And the next time we could break that 175 and run it to 200. I've seen price targets floating around 210 to 200 recently. Any questions on Transmedics? All righty, let me check the chat. MicroStrategy strategy will run 3x if Bitcoin runs. Yep. So it looks like, I'm thinking Bitcoin, we're going to see another pop from Bitcoin sometime soon. And once it runs, MicroStrategy, Coinbase, they should play out of their patterns that we just charted out. But if y'all don't have any other questions, I'll pass it over to Mark. And it looks like we only have 5. Well, I'll just keep it here. We only have 5 minutes, so we'll have to forego the pattern of the week, which I'm pretty sure you all don't mind, since we covered a lot of things on the front side of the session. But let me stop sharing my screen and stop the recording so it can go to YouTube.